Hey traders, back to another lesson here. So I would like to use this trader's journal to exemplify what does it really mean by slow is fast. So this trader is one of my mentees, frankly speaking, and she's a female. She started the account with $5,000 deposit, and within 3 months, I'll say 3 to 4 months period, she was able to turn this account, she was able to double the account, essentially from 5K to right now 10K plus. So let's go into the exact performance here, and let's have a look at the trade frequency this trader has. So January was pretty slow, so not much happening. So she took very little positions, super conservative. But again, trade more does not mean you are necessarily making more. This is one of a common misconception by trader, which is they think if I trade more means I'm likely to make more money. But the reality is, if you don't know what you're doing, even if you have a super high trade frequency, if you don't exactly know your stats, if you don't have an actual system in place, you are essentially just gambling more and you are subjected to blowing up your account. That's it. So you see, in January only 2 positions, February only 2 positions, and some of the positions she actually held it over a couple of days. You see, 4 days, 3 days. That's why you can imagine on 7th of February she took the trade. It was a BE, so he held the position until probably 10th of February. Then you have 14th of February, 4 days, so it should be 18th of February. So the best trade here, the best runner was this one. So this particular one, she only risked about $200 if I wasn't wrong, and she made an 11.25 R. So it might sound a little bit crazy, but it's all about holding on to your winner and have a solid grading system that tells you what's A plus, what's B setup. So within my own system, this is what I actually teach traders as well, is I categorize my setups into the A plus and the B. Why A plus and B? Don't ask me, please. I just love to have 2 different setups. One is a high quality one is a medium quality one. Some of you might be wondering, how about C quality setup? No, if it's C, that means it's out of my watch list. I won't bother looking at the setup because I clearly know it's a low quality or it's a substandard opportunity. So let's look at the P&L here again. You see, there's actually one more trade here. So she took another short on pound yen, closing the trade for about 5R. So let me just show you all, just for transparency purposes. Give me a second. So let me share my Telegram here. Okay. Let me share. So if you look at my Telegram, you can actually see that she's my mentee. Obviously, we started the program in January. Again, I'm not, anyway, just skip it. I don't want to make it sound like I'm promoting our trade club. Anyway, just look at this one. So 5R on GJ. Then I actually told her to update her journal, but I feel like I just want to do the video right now. So she have already crossed 10K. So she's a mother. She's also an entrepreneur. That's it. So back to our notion here. So performance wise, very consistent. So you all can imagine the equity curve here. So started with 5K, so negative $150. Again, please don't watch this video and say stupid things like, why is she risking $150 on the 5K account? Please, this is an amount that she's willing to risk, and this is an amount that she is she's able to just take it. There's no such thing as, oh, you can only risk 1% per trade. This applies more when you are trading with prop firm account. Why? Because you only have the 10% drawdown threshold. That's why you can't really risk anything more than 1 to 1.5%, because these days prop firm will actually send you an email saying that their risk control team identified that you're over risking. Why? Because you essentially only have control over 10% of the account. When you're trading on a personal account, especially when you're trading, when you're trying to scale up an account, anything below 10K is what I consider a small account. If let's say you have a 5K account or you have a $2,000 account, if you don't risk slightly more, I'm saying between 3 to 5%, it is almost impossible for you to see any noticeable growth. If you want to risk 1% per trade on a 5K account and turn it into 10K, it will take a very, very long time. Again, here, the important thing here is know exactly what you're doing and only take calculated risk on the highest quality setup, the highest probability setup. So see here, what I always encourage traders is when you're trying to scale up or grow your small personal account, it is always very recommended to have the gradual increase of your risk. You can do it different ways. You can do it on more of a an increment on the risk percentage, which means, okay, I'm gonna risk 3% per trade. As your account balance grows, your 3% will obviously goes higher as well, the figure. So in that way, it's more of a static percentage risk. But for this trader, because she's my mentee, so I know her performance, I know she already know what exactly she's doing. She know her system pretty well. That's why I told her that you can gradually increase your risk from $150 here, you see, to, okay, risking $200. Once the account goes from 5K to 8.6, I then told her, hey, you can increase to $250. And then right now she's risking about $300 per trade. And again, the latest trade, like I show all of you there, she actually made a 5-hour trade on pound yen. That means that's about $1,500 on P&L. So that will already bring her account to positive 10K plus. So she crossed the 10K figure, which is what I consider not a small account anymore. Yeah, but anyway, if you look at all of her positions, so let's have a look. Trade frequency wise, only how many positions? Only 10 positions in 4 months. So 11, one more pound yen. So 11 positions in 4 months. On average, she only takes about 3 trades a month. Because right now we're still at early April. So let's say she takes 15 trades in total. That is still only about 3.5 to 4 positions a month. So some of you might say, is she under trading? No, she only focuses on the highest quality setup. And again, there's no right or wrong. Some traders, if you're more aggressive, you can have a slightly higher trade frequency, but on another hand, you have to reduce your risk. There's no such thing as I want to risk more, I want to trade more. The moment when you risk more and you trade more, your risk exposure is through the roof. Can you emotionally handle it? That's another thing. So just remember this one key thing is never about trading more. It's about trading well. This is what I always like to say. Don't just think about I want to take more positions, because one of the common beginner problem is we come into the market with the mentality, I'm hyped, I want to get into position. But the key thing is, again, does the opportunity presenting itself, is it actually high quality or low quality? So back to it. So let's have a look at all of the positions here. So you all can also see her improvement over time. So the first trade was actually AU long. It was based on a break and retest. This is a good loss. Why? She's noticed that market has reversed from a major support, and we have a lower time frame breakout structure, and she's looking to trade the break and retest. So pretty good. So second position is more of a mean reversion setup. Again, she traded based on a TPF entry. She saw price rejecting the key level. Again, very patient. Can you see how much time she actually took to wait for price to react at the ideal POI. POI means point of interest, or the level that she wanted to see, and she waited for the exact triggering pattern, which is a TPF here. She then entered based on the strategy 5.3R. So after she took this position, her account went from 5k to 5.8, and then after that, she know that she's getting the rhythm, she's feeling the flow, she's building consistency. And one thing you all should learn from this trader is the risk management. Can you all see the drawdown to P&L to profits ratio? Negative $150, BE, 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 negative 250, negative 200. But the wins, the risk reward here is what makes her so profitable. If let's say she's risking $150, this is a 5.3R, this is a 4.5R, 11.25, 1R, and one more 5R. Her average RR is about 4 to 6 risk reward. Again, this is something some of you may think, is it impossible to achieve IRR? Before this trader met me, she was stuck with having even a 2R trade. Let me try to scroll back to our conversation. Let me see. I'm not sure if I can find it. Let me see. I can't really find it, but anyway, it's been a couple of months. But anyway, she was really struggling to have a high RR trade, because first thing, previously she was learning from someone else. She was learning from a complete different strategy, and her max RR is always 1R, 1.5. So she thought that was the right way to trade. To me, why I always emphasize on having a high risk reward system, it doesn't mean we go for 1 to 10, but if you have an average RR of 1 to 3, and if you have a win rate of 30 to 40%, you're good to go. You are already profitable. Having a high RR on your P&L, on your spreadsheet, it simply tells me one thing, which is you know what a good winner looks like, you know what a high quality setup looks like, you know how to assess a proper price position. Price position simply means before you take the trade, you actually put in consideration of the potential risk reward if price favors your setup. Once you have done the assessment, then I know that okay, you're holding on to the winner simply because you know this is your plan. You have a game plan, you hold on to the trade, well done. That's why when I see traders having a very manageable drawdown like this one, very tight risk management, but super consistent, high RR on all the winners, I know that this person knows exactly what she's doing. So let's have a look at the winner again, 4.5. So you see, one thing you all should also learn from here, you may not be noticing, which is after she took a win on pound yen, she continued sticking to pound yen. See that? One big thing that me personally teach is when you have a winner, means price proves that you're correct. Don't ever try to flip past. On this one, she continued shorting pound yen because she saw further BOS. Then her market tells her she's correct, but price reversed hard, so she decided to be well done. But guess what? Look at this one again. She know that clearly the yen, the JPYX was still strong. That means the yens are likely to drop. She then continued trading dollar yen, and guess what? She's sticking to a winner. She's sticking to her initial thesis. Then here, took an Aussie dollar loss. This was the exact same trade that I also took a loss. Okay, then move on. Euro dollar long. So this is her best runner. So this was also a trade that we called inside our trade club. And anyway, after that she saw a BNR. The setup was pretty simple. All of it can imagine. We saw price breaking out of structure, come back, do a fake out, popping back above the zone. And then we call it a BNR potential setup. She took it, she hold on to the winner, and ride it all the way for 11.25 hour. She closed the trade because that is Friday and we have major news. Again, 11.25. How long did she hold the trade? 3 days. A lot of patience. This is something that majority of you have to learn. I know many of you here watching, you may disagree, may agree. I know if you were to really do a proper journaling, a proper spreadsheet to track your trades, how many positions have you taken in 4 months? And it doesn't matter. You know why? Because at the end of the day, what people care the most, what investors care the most is two things. Your profitability. Second thing, your risk management or your drawdown management. So from here, if an investor were to see this performance, see this equity curve, everyone would definitely invest in this. Why? Because this is something that I personally, I'll be more than happy to put in 50k, 100k as well. Because risk was well managed, drawdown was well managed, she have a solid game plan, and she hold on to her winner. Why not? Right? If you can imagine the equity curve here, let me teach all of you. You just project the equity curve. So you see, so imagine here, she started the account with 5k, and she started with $150, so probably something like this, and then it goes with $800 plus profit. Then she has a BE, and then followed by a $755 win, which is another big bump. Then we have let me do it better, something like this, and then she have a BE, then another $750 win, and then another small loss here for $200, and then she has the massive win here, 2.2k. So that will send her balance right straight up parabolic. And then she has a small loss here, followed by a small win. See, small loss, small win, followed by 2 BE trade and another 1.5k. So this is her equity curve. So this is 5k. This is the kind of equity curve that you will exactly love to see. So let's have a look at the BE trade. So you see, she shorted the position based on our strategy. She closed it for BE after she know that something was wrong. But it wasn't all perfect, because after she closed this position, but supposed it's a loss as well. But if she were to continue sticking to this pair, she could have made, if she re-enter at the high, she probably would have made another 4-5R. When I was running a call with her, she knew the problem as well. So it wasn't all perfect. But this performance here also tells all of you, you don't have to be perfect to become profitable, because we're all human. We are bound to make mistakes. What's more important is you actually know what you're doing. Okay, so another euro dollar long, and then she noticed that market wasn't really moving. Again, it wasn't all perfect. She closed the trade because there was a rate news. She stuck to her trading plan. She stuck to her system principle, and price eventually reversed back up. Look at the candles here. These were all caused by, if I wasn't wrong, it was the GDP or the NFP. So she closed the trade because she wanted to prevent the rate news, because within her system it says that she can't really gamble on the news or risk on the news. So some of you might say, hey, that's about 7-8 hours. She just messed up the trade. Yes, but she stuck to the plan. It's never about the P&L. It's never about the outcome. It's about sticking to your winner. It's about sticking to your system. That's it. So I hope this performance here inspire many of you to actually do the right thing and actually know what you're doing. Okay, because don't ever approach the market with the mentality of I just want to trade more. Not like that. If you don't know what you're doing, if you're blindly trading more, you are just a gambler. Okay, whether if you trade more, whether if you trade less, if you don't know what you're doing, you are just a seasonal gambler. That's what I love to refer. So just make sure you all learn something new from here. Remember, less is more, slow is fast. If you don't know what you're doing, especially when you're in a phase of building consistency, mastering the craft, take it slow. Because when you're taking it slow, your risk is protected. The downside is protected. But when you're taking it too fast, when you're unprofitable, you're killing yourself. So that's it for the lesson. and I hope all of you learn something new. Bye bye.